Hi, Phil Weiss of Apprise Wealth Management here with a video summary of Apprise's 5 favorite reads of the week. Open up this week's blog with some thoughts on the market. Overall, it's been a rough year for investors. In June, we entered bear market territory with the S&P 500 down more than 20% from its previous high. We had recovered some of those losses. Then this week, we had our worst week since mid-July with the S&P 500 down nearly 5%. When it comes to investing, a couple things to keep in mind. One, this is a long game and not a short one. Two, when we invest, we're making an implicit assumption that over time the market's going to go up. Otherwise, there really wouldn't be a reason to invest. And three, timing the market, not something that anybody can do with any degree of consistency. If we miss the market's best days, our returns are going to be a lot lower. So it's typically better to stay invested through the downturn. On to this week's stories. Our first story, 6 key reasons why investing in a taxable account is often underrated. When it comes to saving for retirement, we often think about putting money into an IRA, or 401k, or a Roth IRA, or Roth 401k, because of the tax deferral that they provide. Taxable accounts don't provide implicit tax deferral, but if you keep your money in them and hold on to your assets for the long term, you can get tax deferral because you don't pay tax on gains until you sell the assets. There's other reasons to have a taxable account, which include allowing you to have more of a blended rate when you pull money out in retirement, can reduce your overall tax rate. Read the article to learn more about these 6 reasons why a taxable account can work in your favor. Second, spam texts are surging. Here's how to avoid being swindled. Third, 7 surprisingly valuable assets for a happy retirement. These assets largely relate to our habits and having good habits, things like taking care of our health, exercising and eating right. The last one, though, is one of my favorites. We have 2 dogs, and I've always had dogs for as long as I can remember. Having a dog can help your mental health, keep you a happier person. Fourth, leisure activities may lower dementia risk. When preparing a financial plan for clients, I always include estimates for long-term care costs. Where these estimates can go astray most easily is if somebody gets dementia. That's because our body may still be healthy, but our mind doesn't work, and we can live a lot longer than the amount of time typically provided for in a financial plan. This article talks about how leisure activities can help lower the risk. And last, rate resets on 9.2% interest, taxes, inherited assets. Experts weigh in on 3 tricky questions related to I-bonds. A few weeks ago, I talked about the merits of I-bonds. You can only put $20,000 into them per couple. That's $10,000 each. But they do have merits because of the high interest rate that they're currently paying. This article addresses some key questions related to the investments that you may make in I-bonds. Hope that you find this week's blog helpful. I'll be back again next week with another regular blog. Have a great day.